Hello everyone and welcome to CryptoRed, the channel for crypto news. Of course, today we're going to talk about BTC and Ether. BTC had just broken its all-time high. Nearly all cryptocurrency are up today. I'll talk to you about that, but also about many other topics. We'll talk about Ethereum, which has an upcoming update that has just been announced, the L1 ZKVM. I'll also share some good news about the GMX hack. We'll talk about Donald Trump. We'll talk about Realty, which is facing scam accusation coming from American media, and many other topics. Let's start with the crypto prices. BTC is at $117,000, up almost 6%. We have broken the all-time high. It feels good. The BTC chart has been climbing for a while now. It really is a cryptocurrency apart, being adopted by many different countries and many different companies. In short, lots of good things are happening in the world of crypto. Ethereum also has seen some interesting movement. It hit $3,000. We're still below the $4,000 we saw in December, though. Just to give you an idea of the drop Ether experienced from $4,000 in December to $1,300 in April, and now it's already more than double this. So yes, it's continued to rise. For me, this is only the beginning. I am convinced that cryptocurrencies still have a lot of room for growth. Hopefully it continues. Regarding inflation, according to unofficial sources, specifically Trueflation, inflation in the US is at 1.67%. Trueflation calculates the inflation in real time by pulling daily prices from various sources like Amazon, house prices, in Zillow and stuff like this. It gives a more precise and much faster reading than the official statistics. We even saw 1.3% in inflation in April, so inflation seems relatively under control, and I have no doubt that the official numbers will eventually come down as well, and the Fed will end up lowering the interest rates. Just imagine. We're seeing record high in stocks and crypto markets even while interest rates remain high. That means there's still so much potential ahead for crypto. We've only just begun. Now, back to Ethereum updates. It has just been announced. It's about ZKVM. Yes, you read that correctly. Zero Knowledge Virtual Machine. ZK stands for Zero Knowledge. Ethereum wants to integrate Zero Knowledge technology directly on the Ethereum mainnet and not rely solely on L2s that use this tech. This technology has a lot of advantages. It will allow for increased scalability of the Ethereum network. Thanks to this, we can imagine a larger volume of data being included in a single transaction. Looking ahead, they even hinted at the arrival of a kind of native layer 2 for Ethereum, which would eliminate some of the current constraint and centralization risks of existing L2s, like Optimism, Arbitrum, and others. So it really is a great step forward, and this should happen within about a year. Initially, it will be optional for validators, then it will gradually roll out. Ethereum continue to innovate and use cutting-edge technologies to fundamentally transform the blockchain. This is really the opposite of what Bitcoin is doing. Bitcoin trying to evolve not too much, which is also its strength. Ethereum has a different vision. It continues to roll out, update, and stay technically ahead. We should not forget that Ethereum also wants to reach a stable final form to ossify. That doesn't change much, but for now, they admit they're not there yet. So the ZKVM is really a good thing. It should improve performance on the Ethereum network and bring more decentralization to L2s. Regarding the Ethereum Foundation, there's a meme going on suggesting that Ethereum Foundation always managed to sell at the top. And now the information has come out that indeed they have sold. It was released on today, but they didn't sell at the peak. They sold an average at the beginning of the week for $2,500. So they clearly missed the price surge we saw yesterday and today, but it's still funny to see the Ethereum Foundation having such an interesting timing. And who bought from the Ethereum Foundation? It was Sharplink Gaming, a company partially led by one of Ethereum co-founder who is accumulating a lot of ETH. They continue buying ETH from the Ethereum Foundation. Then, very good news, this has just come out, the GMX hacker returned the money. He returned the vast majority of the funds since he had invested in ETH and ETH rose in value. He was actually able to return more than what he initially took. He kept 5 million as a bounty also, as a reward. We're talking about $42 million that was stolen. So this is really, really good news for GMX, which has come out of this situation in good shape. A major exploit that in the end didn't have a huge impact. Only the confidence of the people on GMX. According to the latest information, the vulnerability was introduced in 2022 as a result of another security flaw that had been discovered. The white hat hacker previously reported the vulnerability, but the correction made to this vulnerability introduced another vulnerability. That's according to PeckShield. Next, Donald Trump. Donald Trump accusation of conflict of interest continue. And this time it's come from Bloomberg. What's been criticized is that CZ, the chief, not the chief, the majority owner of Binance, requested the pardon from Donald Trump, while the company Binance, which is affiliated with CZ, already allegedly helped develop the code for World Liberty Financial stablecoin, the USD1. World Liberty Financial is the company of Donald Trump. They reportedly published the code, promoted it, and on top of that, Binance accepted an investment from a fund in USD1 stablecoin worth $2 billion. Those $2 billion are still with Binance and theoretically generate interest for Donald Trump's company. So with 2 billion earning 5%, that's around 50 million per year, which is significant. Some say this is a form of disguised corruption between the crypto world and Donald Trump. There are also similar elements. For example, Justin Sun announced that he purchased $100 million worth of Trump's token. Justin Sun also had legal action against him. It seems like he's buying his freedom to these moves. CZ also had legal action. The SEC had sued Binance and later withdrew their complaint this year. So is there a connection? You can see how this smell of conflict of interest is strange, and it's definitely suspicious. Now, on to Realty. I think most of you know Realty, the company that tokenized real estates. I talked about them a few weeks ago. They were having issues with properties in Detroit that weren't being maintained properly. Realty had issued a statement about that, but now honestly what's coming out is much more worrying. This comes from Outlier Media, Detroit-based investigative journalism outlets that report extensively on the city. What they're saying is that Realty may have sold shares or tokens for properties they did not actually own yet. That's the first worrying point. So I'm saying they were selling tokens even though they didn't actually own the house. Apparently this was just delayed, but there are quite a few other problems. For instance, they allegedly paid dividends and rents even though they hadn't collected the corresponding rental income. So where is this rental money coming from when 20% of the house are supposedly unoccupied, while Realty reports only 2% vacancy? Next, 20% of the house are supposedly unoccupied. Sorry. Again, I'm just reporting what this article says. There are several other concerns, and some people are starting to say this is just a scam. Realty is basically becoming a Ponzi or Madoff scheme. That's what an investor who bought tokens on Realty said, and he's decided to pull everything out. He doesn't reveal his name, but he points to many strange things based on public records. They said, this media said that Realty sold 664 houses to investors, and out of the 664, a good portion, about 10%, there is no associated deed listing Realty as the owner. So Realty isn't mentioned as the owner in the official documents. In a large percentage of cases, Realty isn't listed as the entity responsible for paying taxes on these properties either. So the question is whether they are just administrative error or something else. Another point I found odd is the article highlights a property owner who sold several houses to an intermediary who then resold them to Realty for $55,000. Yet the owner-seller sold them for only $20,000. Imagine a house in Detroit valued at $20,000, sold to a middleman, and then resold to Realty for $55,000. Realty then lists these houses, and the yield is supposed to be 10% return on these 55,000 houses, which is far above market. The original seller of these houses say it's simply impossible to generate a 10% yield at those prices. So it's completely unrealistic. So where are these returns coming from? Another point, Realty claimed a 2% vacancy rate, but the journalist checked the postal record. It seems to be closer to 20%. A big issue for those who want to sell is that you can't sell all these tokens at once. There is a maximum amount you can withdraw gradually. Liquidity isn't guaranteed. So even if everyone wants to cash out, I don't think it's feasible. That's why some people are saying this could be a huge scam. Personally, I don't think it's it's a giant scam because it started with local Detroit newspaper investigating the poor living conditions and maintenance in realty-owned house, which suggests they do own at least some houses. The real question is whether they're operating at a fractional reserve basis. Maybe they really only own 70% or 80% of these properties, and the remaining 10 to 20% are problematic. Again, this article is pointing out strange things, and we'll have to wait and see how Realty explains all this. But honestly, if I were invested in a Realty with all this information and everything we've seen in the past, FTX collapse overnight, Celsius, Terra Luna, then yes, I would recommend gradually pulling out funds from Realty if you can, even if it means taking a small loss. I don't know how easy that would be on secondary market though. Again, I have no concrete evidence about Realty. I'm just reporting what this article says, and I'm being cautious. I've tried to be as factual as possible and share my opinion on the topic. Now, decentralized finance is still doing very well. I'm going to talk a little bit about Aave. Aave outperformed the sectors in terms of TVL in this past quarter. Aave is doing extremely well. There are nearly 50 billion deposits on Aave, but they're not the only one. There's also other apps that have a huge success. For instance, DYOR Finance, really huge success, all-time high reached recently. So really, really good. That's what I wanted to share with you today about crypto news. I hope you enjoyed it. If you did, don't hesitate to like, comment, and subscribe. And I'll see you tomorrow for more updates. Bye-bye.